The IRS free travel thing isn't a secret trapdoor. It's a real decades old rule in the tax code. Use it the way it's written, and you're fine. Stretch it, skip the paperwork, or treat standby like a blank check, and the IRS will treat those flights like income. That part is not a joke. This is aimed at retirees, but it applies to dependents, family members, guests, and active employees as well. If you retired from an airline or any of its affiliates, those non-revenue standby past trips you've taken for decades are often non-taxable. Under Title 26 of the United States Federal Code, Subtitle A, Chapter 1, Subchapter B, Part 3, Section 132, also known as Section 132 of the Internal Revenue Code, specifically the no additional cost service rule in Section 132B. In plain English, if the airline is already flying the plane and the seat would otherwise go empty and you didn't bump a paying passenger, the IRS generally does not treat that ride as additional income or an extra paycheck. That's the design, not a loophole, not a wink, a written exception. But the IRS still expects you to stay inside the lines. Think of it as 4 boxes. All of them need a check mark. You're a qualified person. You are a retired airline employee, and in the usual setup, spouse and dependent kids through the retiree. Not a contractor. Not my cousin who used to know a guy. The benefit runs from the airline through the retiree to the family, not the other way around. It's a no extra cost ride. Space available, standby, empty seat. Nobody paying full fare got kicked off so you could go to Honolulu in seat 1A with a mimosa in your hand. It's the airline's own service, in their line of business, not a random side deal, bonus, or special arrangement somebody cooked up in a break room. However, there is the Z fare, that other airline caveat mentioned in earlier videos. We'll touch on it a bit more later on here. You can prove it if anyone ever asks, and this is the biggie. You need receipts. Miss those, and the flight's value can get treated as imputed income. The IRS pretends you were paid the value of the trip, then taxes you on money you never saw, retroactively, with penalties and interest if an audit goes badly. That's the seriousness. The IRS does not do, "but I retired," as a personality defense. The exclusion can cover you, your spouse, and dependent children up to your airline's child age limit. That's why this matters more than "I flew to see my sister once." Example, not a promise. 4 people, a handful of non-rev trips a year, coach seats that would have been empty anyway. If you had to put a fair value on those trips, you could be looking at thousands of dollars of income that never hits a tax return, if the flights qualify. Do not invent values. Do not estimate high and hope. The win is exclusion of the no additional cost benefit, not a creative writing contest on Form 1040. A lot of this is baked into union contracts and retiree travel policies, the Retiree-pass. For many former pilots, flight attendants, and other airline people, the same 132B idea can last for life, and often for the spouse's life as well, subject to the airline's own rules, which can be pickier than the tax code. Over 10 years, that's not a free weekend in Denver. That's a pile of imputed income that never existed on a return. Again, only if the trips actually qualify. The IRS is not confused about this. The code allows it on purpose. What they will not allow is no records, wrong cabin, confirmed revenue seat dressed up as standby, or a buddy using your pass like a coupon book. This is the part people skip, then regret. Some airlines, American is a good example, keep a lot of this in My Travel Planner, the employee/retiree online travel system. Listing, pass use, who traveled, when, routing, that kind of thing. That is not just a booking toy. That is often your paper trail. If you're an AA retiree or still on the property, Use My Travel Planner like a filing cabinet, not a suggestion box. Keep copies, screenshots, PDFs of trip records, traveler names, dates, routes, and the fact it was non-revenue space available travel. Save the airline's retiree travel rules for that year. Policies change. The IRS will ask what the rule was when you flew, not your fuzzy memory of what it was in 2017. Other airlines have different portals, but the same idea. If the company already logged it, download it before it vanishes into a system upgrade. And remember, My Travel Planner for non-rev Space A travel and My ID Travel for Z travel are two different portals. On American, retirees can access them via the same gateway, but they take you to two different systems storing your data. If you get audited and all you've got is, "I flew free, ask the airline," you have handed the IRS a very easy afternoon. They can get past use data from the carrier. Your job is to show those trips were the excluded kind, not the taxable kind. Keep it simple. Write down when you flew and where. Who was with you? Spouse, kids, whoever. What seat you were actually in. Coach or business class, Space A standby, not something dressed up to look like a paid ticket. Whether it was a straight non-rev trip or a Z fare. If you handed someone a buddy pass, remember who. And if American or whoever already has it logged in My Travel Planner, grab a copy of that too. A casual, "we just listed and went," plus an accountant guessing on the return, is how a quiet benefit becomes a loud letter. Sometimes you, your family, and friends are not flying free. They're paying the fees and taxes flying on your airline's family or buddy pass system, while you buy a discounted seat on another airline, the Z fare. That can be a different toy. The qualified employee discount under Section 132C1A and B, not the free seat rule in Section 132B, the no additional cost service. This is why it is very important to understand the reciprocal company agreements you plan to use with your Z fare. Remember the Singapore Airlines example in the Z fares explained video? Section 132I1 and 2 define the reciprocal requirements for these interline fares to fall under Section B. Otherwise, it falls under the dreaded Section C1 qualified employee discount. If it does come under C1, a very rough translation is, a modest discount on a service the company sells to the public can be tax-free only if the tax-free discount is capped under 20% of the price offered to customers. Airline friends and family prices are frequently much deeper than 20%, as are non-written, non-reciprocal Z fares. The extra discount is then taxable. Most people just put zero, and nobody ever looks. That's not a strategy. That's a story people tell until it isn't. If the fare is a purchase with a huge haircut, don't pretend it's the same thing as an empty middle seat at 6 a.m. in Cleveland. Section 132 has a "don't only give this to the favored kids" rule. If the airline's pass or discount setup is only for certain classes, in a way the tax rules don't allow, think highly compensated versus everyone else, or a structure that fails the tests. The exclusion can fail, not because you personally discriminated against the cleaners, but because the benefit itself didn't qualify. Of course, you don't control the airline's HR architecture, but you do control whether you claim an exclusion you can't support. If the structure's dirty, "I didn't know" is not a magic eraser. That's why this stays serious even when the travel is fun. If you're still on the payroll, same statute, same empty seat idea, same family rules, same document it. Your listing tool, again, at American, My Travel Planner, is still the place a lot of this lives. You're just earlier in the movie. Retirees are the ones who can live with this for decades, which is why the dollars compound, and why the records matter more, not less, after you turn in your active ID for your retiree badge. Legal. Qualifying retiree and family, space available travel, no extra cost to the airline, records that match what the carrier already knows. Not legal. Stretching who counts as family, treating a revenue seat like a pass, skipping documentation, or assuming retired means the IRS got bored. The airline has your pass history. The IRS can ask for it. The question is not, will they ever see the flights? The question is, when they see them, can you show they were the excluded kind? The funny part? You already did the hard work, the career. The not so funny part? The IRS still wants the homework. This is general information about how Section 132 is commonly discussed around airline pass travel, not tax advice for your return. Airline policies differ, retiree-pass rules differ, Z agreements differ, your facts differ. If the money is real, talk to a tax pro who has actually seen airline pass audits, and bring your My Travel Planner or equivalent printouts, not a vibe. Fly standby? File like an adult. Keep the jokes for a jump seat story, not the Form 1040. You didn't know the legal cost of a seat. Now you know the value of keeping records. Subscribe. There's more of this system waiting to be seen.